Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So guys, let's take a look again on the gold market, keep up with our analysis. So today we, as usual, prepare the fundamental report, and we see a lot of similar things with the euro currency that we have discussed recently. So overall, short-term background on the gold market looks positive, and indeed the Fed has provided some excitement to the market, so it could follow in upward direction in the environment of the low interest rates. But at the same time, we see some things that point on unstable situation. That market stands a bit too sensitive to different events and rumors, speeches, news, and it seems that current upward action looks a bit fragile and could be over in any time. Because in general, markets are watching for August and September, and its time is coming closer. It will make them more pressure on the minds of the investors in anticipation of the starting of the tapering. The tapering itself from the Fed, it's not really significant thing for the market, because what is the $120 billion per month if you see the market value is approximately 22 trillions? If even all the tapering will happen and they cut totally the bond purchasing from the market, that will make minor impact on the market. This is more psychological effect as a preparation for the rate change. But when I'm thinking about it, I'm always keep in mind the target on the dollar index that we have around 87.40, and this is a major monthly target. It almost never market ignores the major targets on the monthly chart. As a rule, in most cases, it should be hit. It means that to hit this target, dollar should drop significantly. In the perspective of maybe 1-2 months. It's precisely the time till the announcement of the tapering in September. What does it mean? It means that I don't know how it will happen and by what reasons the dollar could reach this target. But the most obvious idea that's come to my mind is maybe Fed will change the tapering rules. That will be not in accordance to the market expectations. Maybe they will postpone it to October or maybe even later time. Maybe they will announce smaller volume of the tapering compared to what market expects. We do not know what will happen. Besides this possible issue with some deteriorating in the data and the statistics that we could get and release on August and September, for instance, even on the next week, we will get the non-farm payrolls release. If they will be worse, that will support the current rally on the gold. So what I would like to say is that probably, well, in the perspective of 1-2 months, gold has a chance to stay on the surface and show some a bit higher upward action. It could happen. Despite that, on the weekly chart, for example, this upward rally looks very fragile and choppy and takes the shape of the flag pattern. So you could see it on the weekly chart. It absolutely doesn't look like some rally that could say that we're standing a new long-term bullish trend and it's real acceleration. Finally, with the sentiment, we do not see the great foundation for a strong upward action. Investors are leaving the gold market, so you could see that open interest is dropping. On recent week, despite this upward action, market has lost approximately 23,000 contracts. Positions were closing as by the speculators on the short side, on the long side, as by the hedgers. So, of course, this is not the background for the rally. It means that current upward effect is temporal. But the degree of this effect and how high market could climb, it depends on a lot of factors that's just impossible to predict. So, in the shorter term, we could say only one thing, that currently, based on the price action that we see in recent week, this is definitely not the background for taking the short position by far. Overall market consensus suggests that on the recent injection of the optimism from the Fed, market could climb higher, and investors in general expect reaching of the 1840 target, based on the comments that I see on the markets from the big banks, for example. And this is also actually our view as well. So even last week we said that we have the COP, we have recently fast acceleration that looks even faster than the AB leg, that also looks not bad actually. And with this acceleration, market has enough momentum to climb at least to the COP. This is minimum logical target. Why? Because in this case, market will hit some retracement target on kind of the ABCD. Here we have the overbought right with the COP, but this COP stands above the previous top, and it will be enough to complete the grabbers that we have here. So more or less, but all object points will be completed if market hits the COP. And that will be some healthy background that we could say, yes, retracement is completed. Now we could consider possible, maybe, reversal or something of that sort. We will see what will happen. But in the beginning of the week, we're still watching for upper continuation, and we think that another swing here might happen. Also, guys, we could slightly increase the target, because take a look on the 4 time frame chart. Since market accurately starts dropping from our XOP that we have specified, it keeps valid the previous tops, and that keeps possible scenario of the butterfly. In this case, you can see that extension of the butterfly, the minimum target is 127, stands slightly above. It's around 1846, 1845. That's $5 higher than the COP that we have on the daily chart. So by this logic discussion, we could come to conclusion that probably target we could set around 1840, 1845. So with this downward action, it's also some critical moments existed. First of all, to keep bullish context valid, market no doubts has to stay above the A point, because A point is not A lows, is not just an invalidation point for a butterfly. It's also an invalidation point for a grabbers that we have on the daily chart. And what is more, it's also an invalidation point for the ABCD pattern, because if market will drop below the C, it could be still some different ABCD to the upside, but this particular pattern will fail. So this is important loss. Besides, in drop below the C point probably turns trend to the bearish, and that will be a bit not good moment, because in this case, guys, market will ignore the COP, and the COP is minor target. And with this acceleration, if market is not able to reach the COP with the thrusting action and reverse down, it will tell you that the sentiment is broken. So it should not happen in a situation when the market remains bullish. So that will be a clear sign that market is not bullish anymore. That's why the A point here is very important. Additionally, we could keep an eye on different support area. For instance, on the hourly chart, take a look that we still have got the double repo pattern on the top. So it hasn't been formed early in the morning when we have prepared the update, but later it has been formed. And you can see collapse has happened. Right now, the target of the double repo, the minimum target, is already completed. So this 50% support of the whole upward action has been touched. So now market stands around relatively solid and strong support cluster. This is range around 18 even, 1805, 1810. So that is the area that we intend to keep an eye on in the beginning of the week. Additionally, you could see the support of the natural area. So this was previously resistance. It has been broken here. Now it will become the support. So relatively strong support cluster. And if market is still bullish, that should be enough to hold market here. Besides, since this is the 618 support, this is a very typical area where usually the bottom of the right wing starts to form on the butterfly. This very often happens. So what I would like to say is that in the beginning of the next week, we start watching for some bullish patterns around this area on the lower time frames. 15-minute chart, 30-minute chart. If some bullish reversal pattern will start to form here, that might be used for taking the long position. Currently, I am not considering taking the short position, because there is no some bright signs of the bearishness of the market. Currently, this is just a retracement here. So it's not enough the context to speak about the possible bearish progress here. So that's our current view on the gold market, and that's what we intend to watch here. In a bit longer perspective, I suspect that the Fed statement in September will clarify everything and what scenario they intend to go and what to expect with the interest rates. Until this moment, well, gold will be relatively free in its fluctuations and even could show some positive action. I not exclude that.